Hello?
Hello?
Hey, how you doing, Wall Street?
I'm all right. How about yourself?
I'm doing okay today. I'm glad that you called because something really strange happened to me today.
Mm-hmm. What's going on?
Well, I bought this stock last week, ticker symbol SHIP, and I bought 100 shares at 27 cents. And so I only spent about $27, but it looked like an interesting stock to me. And when I went into my portfolio today on TD Ameritrade, I saw that I only had 6 stocks instead of the 100. Sorry, I only had 6 shares instead of 100 shares that I bought, and I was charged for. So I was charged for those 100 shares. And the price had gone up significantly. It went up, it was over $2 when I took a look. So, I would have made over $200 on those 100 shares, but I only had 6 shares. So I don't understand what happened to my other 94 shares.
When you say you was charged for the shares, what you mean?
Well, I put money into Ameritrade, and I paid $27 for those 100 shares. That's what I mean when I say that I was charged, that the money was taken from my account to pay for the 100 shares.
Oh, okay. All right. And you saying now you only got 9 shares left instead of the 100 that you purchased?
No, 6.
You got 6 shares out of the 100 that you purchased.
That's correct.
So, whenever...
This call and your telephone number will be monitored and recorded.
So one of the things about purchasing penny stocks is that they have something that penny stocks do a lot of times, which is called a reverse stock split. And so before I talk about that, traditionally you have what's known as a stock split. And basically what a stock split is that, say a company's stock price has risen to $100 per share, and the stock price has risen, and the company considers the stock price to be overvalued. And they say, well, the stock price is rising. We think that the price has been rising faster than our actual revenue and earnings are pushing out, and we think the stock is too high. So what they do is they do a reverse stock split. They'll say, we're going to do a 2-to-1 reverse stock. Do a stock split. And we're going to do a 2-to-1 stock split. What that means is, for every 1 share you buy for $100, they're going to split the price in half, and they're going to give you 2 shares worth $50 worth the same value. All right. So instead of you having 1 share worth $100, you're now going to have 2 shares worth the same $100. And so companies typically do stock splits when they feel like the price is overvalued, and they do 2-for-1 reverse stock splits, 3-for-1 reverse stock splits, etc. A reverse stock split is just the opposite of the stock split. Typically, companies do reverse stock splits when they want to get their stock prices back above $1 for regulatory requirements. So whenever you list on the New York Stock Exchange or the American Stock Exchange or other exchanges around the world that have these listing requirements, they say that your stock price must trade above $1 at all times. And if it doesn't, the exchange reserves the right to kick you off that exchange if you don't meet these requirements. And typically what they do is when the stock price falls below that, whatever exchange that the company is listed on will give them grace periods. They'll give them notices and say, you got 30 days or 60 days or 90 days, what have you, to get your price back above $1 before we delist it. In the case of the stock that you got, Ship. Ship did a reverse stock split. Now, I don't know exactly the exchange that Ship was trading on, and I don't know the actual reason Ship did the reverse stock split. But given that Ship is a penny stock, typically penny stocks do reverse stock splits more times than bigger companies do because it's about pushing the price up. So when they did the reverse stock split, your 100 shares that you bought for, you said what? How many cents you said you bought them for?
27 cents.
So the 100 shares that you bought for 27 cents, when they did the reverse stock split, instead of you having 27 shares, instead of you having 100 shares at 27 cents, you now got 6 shares worth $2. Or whatever the price was. So your 100 shares didn't evaporate. You now got 6 shares. You got 6 shares with a higher stock price. So the value of your shares are the same. You just have less shares at a higher price instead of having more shares at a lower price.
Okay. Except they weren't. It didn't
right.
turn out. It didn't turn out to be exactly the same because my 100 shares cost $27, and my shares right now are at $2.18. So that's like $12, right? No. Yeah.
That's because the stock price had fallen. That's why. So remember. So when they do a reverse stock split, the stock price is overinflated. When they push the price up, they're not pushing the price up for the sake of shareholders. They're pushing the price up for regular requirements. So when they inflate that price oftentimes comes back down again. All they're doing is inflating the price to keep them so they can stay on the exchange to buy time while they figure things out. That's a reverse stock split. Is not in the benefit of shareholders like a stock split is. A traditional stock split is in the benefit of shareholders, and a reverse stock split is not in the benefit of shareholders. To your point, the stock price is now back down. So whatever price that Ship decided to do the reverse stock split at, whatever price it rose to, that price has come down, which is why your stake now is only worth $12 instead of the $27 it was when you purchased the stock at 27 cents.
Don't companies have to let shareholders know that they're going to do reverse stock splits?
Companies do let shareholders know they're going to do a first stock split because they have to get approval from the boards in order to do it. What investors have to do, which is what they don't do, is they don't know, like you don't know, what a reverse stock split is, so you don't know to look for one even if the company's told you.
Well, but how are they supposed to tell us? I mean, if we're buying through a trading app like Ameritrade, don't we have to receive some kind of alert or notification?
No, because the only people who receive notifications and things like that are typically registered shareholders. And in order to be registered, you have to own the stocks between a certain date in order for dividend purposes and things like that. When you buy stocks, you're buying stocks from just regular people. You're not buying stocks from the company. So when you bought those Ship shares, you didn't buy those shares from the company. You bought those shares from another investor that sold them to you. So You know how I always say, when something happens, go check the news feeds so you can see what's coming out when you make purchases. Now, I would imagine that if you go to the news feeds, and you go to Yahoo Finance and you go to the section where it shows you articles, I bet you'll find an article that talks about them doing a reverse stock split before they did the split today. I'm quite sure of that. I would be shocked if there's nothing saying that they was talking about a reverse stock split and they just incorporated the price. I seriously doubt that. But the problem with dealing with penny stocks is that it's hard to find information about these companies. So penny stocks can be very unpredictable. And that's why I always tell people that you got to know when you buy these companies, the reasons you're buying them. So I always tell people that the thing about penny stocks, one of the first things you want to look for is to see if the companies are announcing any kind of reverse stock split, particularly if you're buying in bulk. Because if your strategy is to buy tens of thousands of shares of a stock that's 10 cent, 15 cent, or 3 cent, and the company does a reverse stock split, your 10,000 shares can fall all the way down to 100 shares, which then feeds into your strategy of selling small price increases in the stock. You see what I'm saying?
Yeah. I'm looking on Yahoo Finance.
So
I'm looking on Yahoo Finance right now, and an article came out yesterday explaining that Chip announced the plan to go ahead with the 1-for-16 reverse stock split in order to comply with NASDAQ. Yeah.
There you go. So it's an article came out yesterday that talked about Chip doing a reverse stock split. So when you just asked me, don't they have to announce something? There it is right there.
I see. Okay. So if I could go back
and... You don't know to look for a reverse stock split because you don't know what you're looking at. Huh?
Okay. So if I could go back in time to Friday, right? The market's closed on Friday. This news came out on Monday. So on Friday, what should I have had set up? What should I be looking for? Is there something that I can do with the other stocks that I own that are also penny stocks to make sure that this doesn't happen to me with those stocks? What does a penny stock investor do to try and set themselves up up?
If you're going to invest into penny stocks, you gotta just know there's risk to it. There isn't anything found with penny stocks. They're crap companies. There isn't any like formula like you do with traditional trading, because the penny stocks can be shell companies. There can be some pump and dump schemes. There can be a bunch of stuff going on with those companies. So it's not really some set strategy. You can be like, well, do this. The one thing I always do when I'm picking a penny stock is I always look for reverse stock splits. I look for that first. And what I do is I go to look and see how long this company's stock price has been trading below $1. If it's been trading like that for years, I know at any given time a reverse stock split can be in the cards. I always come from that perspective. Now, I might not have any knowledge to determine that, but I know that penny stocks typically do reverse stock splits. And if I go and I buy 10,000 shares, and I know, well, if the stock price rise 10 cents, I can make $1,000. Or I buy 100 shares, or I buy 100,000 shares, and I say, well, if I buy 100,000 shares of this stock that's 15 cents, and the stock price rises 1 penny, I can make $1,000 and get out the way. If you do a reverse stock split, that strategy doesn't work anymore because you won't have that many shares anymore. So being that I know that that's the case, the first thing I look for whenever I buy a penny stock is will they do reverse stock splits or something like that.
Okay.
That makes sense?
Yeah, it makes sense. Okay. All right. Well, thanks, Wall Street, for explaining this to me.
You're welcome. All right, you guys. Take care.